Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my new or updated patrons, Hal Vibe and Harold B. Thank you for choosing to support the channel. Definitely do not get carried away with this one, but we get some hope when it comes to pothole avoidance.
Oh, these potholes. Please slow down. Please slow down. Ugh. Oh, it's slowing down. All right. Couldn't avoid that many potholes, but at least it slowed down. That's amazing. Treated it almost like a speed bump there.
Just FYI, there are other instances of similar behavior, so that wasn't just a one-off. At this point though, I would not be relying on that feature to be reliable everywhere. I believe this picture is coming from Australia, but with a new Tesla Spring update, Autopilot now also gets a full screen visualization. As some videos of this Tesla Spring update begin to come out, it looks like the power meter has been moved from the top over to the left-hand side for acceleration and regen braking.
This is what it looks like in park. So you can move it around. Can you zoom? Sort of, yep. It's pretty cool. And it will just snap back. And pause it. Close it. It's pretty sweet.
That one was also in Australia. Tesla shared some communication with owners in Australia and South Korea saying that the referral benefits will be ending on April 30th this year. With this one, is Tesla looking to cut costs? Is this part of Elon's new streamlining the sales and delivery program? Will this roll out on a global basis? For now, we don't know. Cybertruck customers are once again getting their VINs, and to that, Elon said, "There were no injuries or accidents because of this. We're just being very cautious." One could argue Tesla got fortunate with this one. If it really was the accelerator pedal or part of it getting stuck down, that could have caused some problems. It's wild how every move Tesla makes gets blown out of proportion. The FUD right now around Tesla does feel like it's near an all-time high. For example, this article titled "Tesla's Cybertruck Disaster, Insider Reveals Serious Safety Issues Behind the Scenes of EV Rollout." The article goes on to talk about that pedal issue that they referred to as a gas pedal, and then proceeded to highlight all of the unfinished Cybertrucks from a drone flyover. And then on Reddit, people just feed on this stuff. The good news though, deliveries have resumed. Some source code on Tesla's website in the UK was spotted for the upcoming Model 3 Performance, and they're saying that it will be called the Performance, not the Ludicrous, as we've been expecting. Nothing in the source code is a guarantee, and we should be within a few weeks of launch, but here's what they found. All new adaptive damping powered by in-house software gives you enhanced body control without sacrificing daily usability or comfort. A bespoke chassis and suspension hardware is tuned to provide intuitive, razor-sharp response to driver inputs. Track Mode V3 features all new calibration for the powertrain and adaptive suspension to give you more authority behind the wheel. You can customize your handling balance, stability, controls, and regen braking to set the car up how you like it. The Performance variant will have a unique daytime running light designed for better visibility. Some of these we've already known about, but another, lightweight staggered wheels provide sharper turn in response, improved predictability, increased traction out of corners, and optimized aerodynamics. A user on TMC also said enhanced pedal feel and improved heat management to ensure consistent braking at all speeds and across a wider temperature range. The code mentioned combined horsepower over 500 without being specific. I believe the outgoing Performance variant was 505. Nothing was in the code for the acceleration, but the whisper number is 2.9 seconds. Goldman Sachs just put out a note about Tesla and autonomy. Actually, their price target is still only $175, but they had some encouraging things to say. The bottom line is that we believe Tesla is among the leaders in autonomy ADAS tech, and in the long term, we believe software and digital services can be a meaningful driver of its business. With this one, the specific numbers really aren't what's important to me. It's just that Wall Street is now beginning to actually model for the Robotaxi business. This table is certainly pretty basic. They just have the number of Tesla Robotaxis in operation up here with the blue highlight, and then the revenue per trip over on the left, number of trips per Robotaxi per day, and then the chart with the results. Just to explain the high end, they take 1 million Robotaxis times $35 per trip times 20 trips per day to get a number of $255.5 billion in revenue for the year. These numbers are in millions. They did a similar chart for the monthly subscriptions, but Exhibit A, why I'm not that concerned about the specific numbers, for the installed base, they started on the low end with 25 million. All they're doing here is taking that installed base times the actual monthly dollar amount times the attach rate and then multiplying that by 12 months in a year to get the revenue figure here. But given Tesla's current global fleet is around 6 million, why in the world would they start with 25 million on the low end for the installed base? Again though, what's really important here is that Wall Street is spending time modeling for robotaxis. Morgan Stanley also gave us a new Tesla stock note. It can be helpful to stay abreast with what Wall Street is thinking about and what questions they're asking. Here they said, perhaps Tesla has already learned what most auto analysts have long known about the car industry. That after saying, even if Tesla were to release a $25,000 car with a lot of nice features, how long would it take for China to duplicate what they have done? Obviously that would help Tesla grow volumes, but what's it really going to do from a margin perspective over the long term? Morgan Stanley still is not expecting actual robotaxis without a human for the next decade. And while the non-GAAP consensus EPS from Wall Street for Tesla fiscal 2024 is $2.67, Morgan Stanley is only expecting $1.12, significantly below. And underscoring what we talked about yesterday, they said we would argue the uncertainty around Elon's comp plan and related concerns raised by Elon of not wanting advanced AI capability held in an entity for which he doesn't have a blocking minority is creating great angst amongst Tesla investors. Thus, Wall Street is asking the question, where will the AI value accrue, within Tesla or outside of Tesla? For them, that question is an existential one and, in their view, highly deterministic to the long-term option value embedded in the stock. Finally, despite all of the negative sentiment, the positive factors underpinning an investment in Tesla, data, tech, compute, infra, AI capability, are far less visible and very much being drowned out of the narrative. This is understandable and, in our opinion, it will eventually change. I definitely don't agree with all of their conclusions all the time, but they really are starting to understand the Tesla story. In Europe, the rate for non-Tesla owners to use the supercharger network has been reduced. We're talking euros here. It went from $12.99 down to $9.99. There's also now an annual option for 100 euros. As Joe Deely highlighted on Tuesday night this week on the California grid, battery storage discharge went over 6 gigawatts for the first time, and batteries were the largest source of supply for a time. If you go to gridstatus.io, you can actually check, and the previous record was 5.6 thousand megawatts on February 14th this year. For the Kaizo grid, this chart is just showing the energy in megawatts broken down by resource in 5-minute increments, and with this screenshot we have batteries ahead of natural gas. You couldn't see it in that image, but batteries were the leading source of supply for about 2 hours. A pretty cool milestone, as this means battery storage became for the first time the largest source of supply in the California grid, which delivers electricity to the world's 5th biggest economy and is one of the world's biggest grids. If you go back to 2020, the record output at that time was only 195 megawatts. Bloomberg went through some federal data and said there were almost 600 public fast charging stations switched on for US drivers in the first quarter, up 7.6% over Q1 of last year. Here's some good data for your conversations. There are now almost 8,200 fast charging EV stations across the country, or 1 for every 15 gas stations. Tesla is responsible for slightly more than 25% of them. Bloomberg NEF is estimating that annual global public charging revenue will be $127 billion by 2030, with Tesla on track to account for $7.4 billion of that. And as we've talked about, more and more of these charging stations are now becoming profitable. Finally, more DCFC stations are actually coming online, with the federal funds now flowing to different states, but there's going to be a gap from this actually happening and the public realizing it. Tesla is pushing forward with their plan to build an electric big rig charging corridor stretching from Texas to California. Tesla was looking for $100 million, and then they were going to kick in $24 million of their own. They're looking to build 9 semi-charging stations between Laredo, Texas and Fremont. Despite Tesla missing out on this round of funding, Rohan Patel actually said some of the sites along the route are no-brainers even without the funding. The 1,800-mile route should help connect Fremont to Giga Texas and ultimately to Giga Mexico. The plan is to have each station with 8 750 kilowatt chargers for Tesla semis and 4 chargers open to other electric trucks. It gets worse than Tesla just not getting the funding. We have half of this tranche of funding from the CFI being for high-use locations, schools, parks, libraries, etc. Then the other half of the funding was actually for corridor projects in the same area where Tesla was looking to do this, but instead they want that money to go toward hydrogen fueling stations. To that, Rohan Patel said funding hydrogen stations will go down as purely wasted money. Governments around the globe are wasting tax dollars on hydrogen for light heavy-duty infrastructure. Like smoking, it's never too late to quit. In my opinion, it's things like this that will serve as the canary in the coal mine for Tesla actually launching high-volume semi-production. There's no point in making thousands for many different customers with routes across the country if there's nowhere to charge. Stanford has been tracking Redwood closely the past 2 years, and they put this report together and concluded that Redwood's recycling and refining operations cut carbon dioxide emissions by 70% compared with traditional recycling methods and 40% compared with other recycling processes. The savings were even greater when Redwood was dealing with manufacturing scrap, which currently makes up 50% of the materials available. At Redwood, nothing goes to landfill, there are no gas lines, everything is electric. This is also important to keep in mind for conversations with doubters. Their CTO said, once we've changed over the entire vehicle fleet to electric and all those minerals are in consumption, we'll only have to replace a couple percent each year that's lost in the process. They talked about one of Redwood's more important innovations, the RC1, which is basically an enormous slow cooker baking the junk at several hundred degrees for about an hour. This machine does not use any oxygen, there's no combustion and thus no emissions. It simply reduces the glues, plastics, and unwanted fluids into charcoal. After going through the RC1, Redwood then does some sifting using high-power magnets. Excitingly, in the coming weeks, Redwood's copper foil production, which has never been done in the US before, will officially enter the supply chain to be used in American EVs. Redwood's single foil making machine can supply enough batteries per year for more than 13,000 long-range EVs. By 2028 though, between Nevada and the new location in South Carolina, they expect to have 100 of these machines. They still have plans to supply the Panasonic factory that should be ultimately supplying Tesla and others, and Redwood is currently processing waste at a rate of almost 20 gigawatt hours per year. Tom Randall from Bloomberg just got a tour of Redwood and shared some pictures. This is that RC1 machine. Great to see Redwood making progress on a very hard problem that eventually Tesla will also benefit from. David Barron, Ron Barron's son, who manages a little over $1 billion, just said the Model 2 is a crucial piece of our thesis. If they stop that, that's investment thesis changing. David said he'd be very surprised if the Model 2 was actually taken off the table. To reiterate that point, Deutsche Bank just downgraded Tesla on the idea that Tesla might delay plans for the Model 2. Even Barclays just said that Tesla's Q1 call is extra highly anticipated and it expects it to be a negative catalyst for the stock. Dan Levy from Barclays said this strategy pivot is a clear net negative for the Tesla investment thesis as it casts significant uncertainty on the path ahead for Tesla, making success of the stock dependent on bets with seemingly binary outcomes. Barron did say there's too much growth potential in the company. The full self-driving is too big a recurring revenue and earnings opportunity to not invest in right now. I'm really just sharing this as confirmation of what I said 2 to 3 weeks ago, that Wall Street is not going to like Tesla shifting its focus to Robotaxi, deprioritizing the Model 2, or whatever you want to call it. Hyundai announced a new partnership with a material manufacturer, Toray Industries, to develop materials to enhance the performance of EVs. Hilariously, they said, "We aim to become the first mover and gain a competitive edge in the global market." No shade to Hyundai, they're doing good things with EVs, but first mover? Come on now. Consumers are getting some big discounts on EVs at the dealer lots. Nissan is now offering discounts up to $16,000 and Mercedes up to $19,000 on their EQS. In Q1 in the US, the average transaction price for EVs was $55.1 thousand compared to $47.7 thousand for ICE vehicles. Sadly though, this number for EVs will continue to be skewed upward as all of these manufacturers roll out their early EVs that are higher on the price scale. The dealer angst against EVs and Tesla continues to grow. One said, whether it's a retailer, whether it's a manufacturer, all of us in this EV space are going to do a whole bunch of stuff we don't want to do, mainly as a reaction to Tesla. Because they're such a dominant player, whatever they do moves the market in that direction. This owner, who runs 30 dealerships, was saying, we refused to take any more at this time, talking about Mustang Mach-E's. His stores have taken a loss on almost every EV they've sold in the last 3 months. We knew this one was coming and now it's here. Republicans from 25 different states sued the US EPA to block those rules intended to reduce emissions. The new heavy-duty trucking emission regulations are not included in this lawsuit. The Kentucky AG said the rules would harm the American economy, threaten jobs, and raise prices while undermining the US electricity grid. He said there is very little consumer interest in EVs in his state. So even though the EPA did lower its emission regulations, that was not enough. This is the one where the EPA was looking to reduce emissions by about 50% from 2026 levels by 2032. Mexico's federal government, under pressure from the US, is keeping Chinese automakers at arm's length by refusing to offer incentives like low-cost public land or tax cuts for investment in EV production. The last meeting Mexican officials had with a Chinese EV maker was BYD in January this year, and the Mexican officials made it clear they would not give incentives like those awarded to automakers in the past. They're also pausing any future meetings with Chinese automakers. About 20 Chinese automakers now sell cars in Mexico, but none yet have a plant in the country. Chinese vehicles constitute about a third of the total brand offerings in Mexico. The US tariff for an imported Chinese EV is currently 27.5%, so the US is looking to avoid Chinese automakers coming in through the side door through Mexico, and ultimately avoiding those tariffs. Mexican officials said although Chinese investment could help the local economy, the government is concerned about angering Washington with the USMCA up for revision in 2026. Under the Sunset Clause in July 2026, the three countries will decide whether to extend the USMCA for another 16 years. GM Energy is now preparing to begin sales of bidirectional chargers for residential customers, with the 2024 Silverado EV RST the first vehicle to have that ability. Eventually, these chargers will be available nationwide, but to start, only in a few states: California, Florida, Michigan, New York, and Texas. The pricing for this bundle, which includes a power shift charger and a home enablement kit, will be $7.3 thousand. Installation costs will vary. The chargers are 19.2 kilowatt, and in the future, GM said consumers will also be able to buy stationary energy storage and integrate it with solar. These products will be sold through GM's new e-commerce platform. GM said it plans to have bidirectional charging for all Ultium-based EVs by the 2026 model year. A Mercedes plant in Alabama will be voting on joining the UAW May 13th through the 17th. The governors of these 6 states just signed a statement saying, "We want to keep good paying jobs and continue to grow the American auto manufacturing sector. A successful unionization drive will stop this growth in its tracks to the detriment of American workers." Emmanuel Rosner from Deutsche Bank actually had an interesting comment when he was asked why he's giving Tesla a 42 multiple for their price target right now.
The thing is, it's not like Tesla is, shutting its doors. They're now going all in on Robotaxi. We do a deep dive on Robotaxi in the notes. We're not going to go through it now, but the point is, it's hard to put into numbers, and it's certainly not into our earnings model. But that optionality is very, very much there. It would be highly differentiated, and we think that we should at least account for it in the multiple. So the multiple is punchy despite no earnings growth, because in the end, investors in Tesla will basically say, okay, I understand the core business is no longer growing, potentially even shrinking, but look at how exciting this business could potentially be. Our rating, though, indicates this is highly risky. If it plays out, if they can deliver the Robotaxi, is it exciting? Massively exciting. How long will it take to get there? Can it even get there based on technology risk, regulatory risk, operational risk? This is very, very difficult to say. So we're still applying an unchanged punchy multiple, but on much lower earnings trajectory.
The information got its hands on Tesla's latest organization chart after all of the shakeup. Now we have at least 35 people reporting directly to Elon. Some new direct reports include key executives overseeing energy, public policy, and business development. Not only that, but the head of sales for North America and Viv, who runs Tesla's account on X. Elon has assumed the oversight of the people who were reporting to Drew Baglino. Among those executives are Rebecca Tanucci, Senior VP of Charging Infrastructure, and Bonnie Eggleston, Senior Director of Tesla's 4680s. Rohan Patel's role is now divided among Brooke Kintz, Director of Government Relations and Policy, and Directors of Business Development Hassan Nazar and Patrick Bean. Don't freak out, the org chart did not have Ashok Elaswamy or Milan Kovacs, the director of Tesla's bot, but they said the autopilot org charts were not visible to employees in recent months, most likely to deter poaching. One of the bigger changes though, Elon is now overseeing sales in North America, Europe, Middle East, and Africa. Here you go. If you've been hoping for Elon to become more involved again in the company, here's our wartime CEO doing exactly that. Tesla stock closed the day at $149.93, down 3.55%, while the Nasdaq was down 0.52%. It was a normal volume day for Tesla, trading about 2 million shares above the average volume the past 30 days. There were some government officials learning a bit about the Cybertruck, and we also found out that Ye apparently now has his Cybertruck. I hope you guys have a wonderful day. Please like the video if you did. You can find me on X linked below, and a huge thank you to all of my Patreon supporters.